Welcome back. We've been discussing the monetary policy that was announced by the Reserve Bank today. And I've been speaking with B. Prasanna of ICICI, Samiran Chakrabarti of Citi, and Pranjul Bhandari of HSBC. Pranjul, what is your sense about growth? Do you think, you're going to see rates beginning to bite growth at all? The governor made a point that he has not included the impact of the monetary policy actions on his inflation forecast. But what's your sense? Will it start hurting growth at all?
My sense is that in terms of growth, we are actually doing very well right now. There's this big wave of pent-up services demand. Remember, urban inflation hasn't yet risen as much as rural inflation. So urban purchasing power is also relatively strong. My worry is that in the second half of FY23, growth could begin to slow. As this pent-up wave of services demand fades, as urban inflation catches up with rural, and also as exports begin to slow. So I do worry about growth slowing. In terms of just numbers, my sense is first half of the year, growth will be about 9%. Second half of the year, it will slow to about 5%. For the full year, I have a growth forecast of 6.8, which is lower than where RBI is at right now, because in my numbers, I have actually tried to incorporate some of the impact of higher yields and higher rates at this point.
RBI's second half is only 4%, Q3 is 4.1 and Q4 is 4%. So they are looking at a fairly bleak growth in the second half. But let me first come to another bite that I picked up. Just listen to what the governor said when he was describing the monetary policy quality, monetary actions.
We are not, that is the RBI is not bound by any stereotypes and conventions. The RBI will continue to be dynamic and pragmatic in our approach.
What does this mean, Samiran? Is he saying there can be another off-cycle hike? I mean, what do you mean by we will not be stereotype and we will be unconventional with such deliberate emphasis?
I don't think the governor was hinting anything like a intermeeting hike or anything of that sort. I guess world over, there is a thought process going on that to what extent monetary policy is the most useful tool to control supply side inflation. Is it even in a position to affect second round effects through inflationary expectations, etc.? So, it's tough to say exactly what the governor meant by that comment, but it could well be that some of these theoretical foundations of relationships between monetary policy and inflation, which are getting debated across the board, he was referring to those sort of issues rather than referring to an intermediate rate hike.
Well, actually, when the governor spoke, he gave the intermeeting policy. At that time, he referred to his April statement and said, why didn't you all guess that we were hinting at an unconventional, at an off-cycle rate hike? Prasanna, I wanted your interpretation as well, whether we should expect that. And more importantly, where do you see yields by December? Is 8% round the corner?
So I think I would agree with the way Samiran kind of interpreted the governor's statement. But I'll also add to say that I think there has been of late a lot of noise about how transparent the governor or the RBI should be or the MPC should be in laying out the path for interest rates in the future. And I have just one answer or one suggestion, which is that the world is so uncertain right now, it's virtually impossible for any central bank to give a lot of clarity. And even the Fed, which actually has been giving the dot plot and all that, has been constantly, revising it. So I think the best case for a central bank like RBI would be to, keep all cards close to its chest, because it wouldn't want to be complacent on inflation. It wouldn't want the market to, take its eyes off inflation. So I think and the uncertainties of oil price going to 150 and the uncertainty of the Fed interest rate cycle itself, is it going to stop at 2.5 or is it going to go all the way to 3.5, 4, is still there. The debate is still going on. So in that situation, I think RBI would want it just to keep all cards close to his head. That's the way I read it. And in terms of answering your question on where do yields go, I think there was a relief rally today. I think, Lata, you also pointed out to that in your earlier commentary. And that is basically because whatever happened today happened as per expectations, unlike the intermeeting policy hike or even to some extent what happened in the April policy. So I think market was relieved, number one. But then when you really look at the fact that any amount of rate hikes getting priced into the market, it does not really gets priced in truly till the time we are very, very close to the rate hike cycle getting over. And by that, what I meant is, yields, you can argue that the market has priced in much more rate hikes than what RBI is going to potentially deliver, because we all spoke about 6% in this panel, but our market is pricing in 7%. So why isn't the yields falling? That's because we have a series of rate hikes ahead of us, and it's very difficult for the market to, take that call. And also that premium is because of the couple of uncertainties that I spoke about. So I do think that there will be a slow grind up towards 775 as the borrowing program happens and as RBI hikes more in the next policy and the policy after that. But if the view were to be that the market is pricing in too much of rate hikes, at some point of time it will reverse, but that time is probably later and it will not. It's not.
So the high, 1 minute, very quick answers. High you see is only 775, not 8. And do you see deposit rates going up, Prasanna?
No, I think right now we are looking at 775. Maybe if it comes closer to that and we are still too early in the cycle and we still have a couple of rate hikes ahead of us, then maybe 8% is also possible. I won't deny that. And in terms of deposit rates, yes, I think, one good thing which has happened is the CRR has not been hiked again. And had it been hiked, it would have been a little bit more of a panic reaction from the banking system, because some banks are at the margin on the LCR and then they would have to raise CDs and deposits much more aggressively. So what this policy has done is to kind of give some kind of breathing space to the banking system. That is not to say deposit rates won't go up. Of course, it will go up. It will be up to the respective banks to, meet in their ALCOs and announce, depending upon their own liability profile, their own asset profile, and to the extent they're going to grow their asset side.
Okay.
So I think deposit rates will go up, but it will be a gradual process as we go on. Okay.
Well, Samiran, when can RBI tame inflation? Your own forecast, I read your report, you're expecting 7 through the 4 quarters, as even Pranjul said. When do you think they can tame it at all?
I mean, there are so many uncertainties that I will also probably not be able to give you a very concrete answer, thumping the table on exactly when we would get back to a more comfortable level of inflation. But let me put out still a few kind of complications that goes through our minds. So one issue is about whether this supply side shock is going to result into a wage price spiral or not. Our own analysis suggests that even for the March quarter, the wage cost growth for the listed companies was more than 12%. So early signs of wage price spiral, but we have to see how it goes as we move into the rest of the year. The second very complicated issue is the feedback loop between policy action and inflation. If inflation is higher, then policy action will be stronger, and vice versa. How that feeds into lower inflation is a very tough one to model. In fact, RBI also today has said that in their own forecast, they're not assuming any impact from today's rate hike because it's difficult to model. And the third issue is global. If all central bankers acting together leads to some sort of substantial slowdown in global growth, resulting in lower commodity prices, then India is also a beneficiary out of that. So depending upon all these issues, we would have to take a stance on when we come down at least below the 6% mark. I think 4% is something which is still some time off, but at least coming down below 6% will be the first step.
Yeah, 6% is quarters away, 4% I think is years away. Not much time left. Pranjul, your estimate on inflation, what is the FY24 estimate?
Yeah, our medium-term inflation forecast with all the uncertainties is currently at around 5.5%. And I think what this really means that despite all the efforts the government has made in terms of cutting tax duties, the RBI is going to be making in terms of rate hikes, draining of liquidity, we are going to be very far away from the RBI's 4% target. So I think that is the one thing that that will give. We are not going to get to 4% for several years. Is what we believe at.
Well, all economies have moved to a higher level of inflation, so perhaps RBI will also wriggle out giving that explanation. Samiran, just one final question. The MSP increase, does it move the needle on CPI?
So our estimate is that the weighted average MSP is in around 5.5%. Now, this is higher than what we have seen in the last 3 years, which is more like 3 to 4%. But still, compared to where the cost of production increase that we were factoring in, which was closer to 10%, the government's estimate of cost of production increase is much lower. And that's why the actual MSP increase they have announced is also lower than what part of the market was fearing about. We always believed that in an inflation controlling environment, the government will opt for a lower MSP increase. So this matches with our baseline forecast. So the 35-40 basis point upside risk that we were thinking if MSP increase would have come at 10%, I don't think there is any need for that upside risk to be in our price forecast, in our inflation forecast anymore.
All right, got that. So as per both the economists over here, the RBI even at 6.7 is kind of behind the curve and the actual inflation may turn out to be higher, but the villain will not be MSP. It is going to be anyway at 7%. Prasanna, Samiran, Pranjul, thank you very much for helping us understand the monetary policy announced by the Reserve Bank.